This is lesson number 1, and there will probably be 30 lessons in this section. And what I've done is I've taken the AQA Business Studies course and I'm looking at all the numerical evidence. Now this will be suitable for the syllabus in 2014-2015, but from next year, obviously from this September, we're moving on to the new course. But the numbers will also be the same. If you get a really good grasp of the numbers, it will probably make 2 to 3 grades difference on Unit 1, 2 to 3 grades difference on Unit 2, and on Unit 3 it will allow you to get 100 out of 100. So if you really understand all of the numbers, you can use them on all those 3 units. Plus on the last units, when you're talking about it, you can bring in that numerical evidence when you're talking about the different companies. Okay, so the objectives today are to look at profit, gross profit margin, net profit margin, fixed costs, variable costs, and adding value. I do this through an example of hamburgers because between the ages of 17 to 19 I used to go around all the showgrounds in the UK and I used to make hamburgers at the showgrounds. That was before the health and safety standards were strict, and actually I probably made more money then than I do now. Anyway, so these are the objectives on here. First of all, we're going to look at profit, and all profit is total revenue minus total cost is equal to profit. Total revenue is always equal to the price of the good times the quantity, or how many goods you actually sell. Total cost is made up of variable costs and fixed costs. Variable costs always vary with output, and fixed costs do not vary with output. So it tends to be things like wages and electricity costs that you have to pay out. Okay, but as I said, I was just going to give you a very simple example of how this works. So for the hamburger example, we're pretending that a hamburger, you sell it for £2, it costs you £1 to make. That's the hamburger, the onions, the bread roll. The fixed costs happen to be 200 quid. So if you don't sell any hamburgers at all on that day, you still have to pay £200. Right, so then we create an income statement, or what I prefer to call a profit and loss account. So you do the sales revenue, and if you sell 500 burgers, that's going to be 500 times 2 quid. So 500 times 2, quantity times the price, that equals £1,000. Then we can put on the variable costs on here. I always like students to put it in a nice format, preferably down the page, so they don't make errors. Now I'm going to put both of these in red because obviously this is money going out of the business. So you do 500 times 1, so you do 500 times £1, and that is equal to 500 quid. Now actually there's a thing also here that we call gross profit, and our gross profit here will be £500. So it's just the sales revenue minus the variable costs. I could really call those total variable costs. And then also we need to take off the fixed costs. So the fixed costs here, obviously that's also a negative number, so I'm going to put those in red as well. So the fixed costs come to £200. So on that particular day, I would have made £300 profit, which is okay. It's a reasonable amount of money, particularly about 30 years ago when I used to sell the hamburgers. Right, but then we get onto this concept of adding value, which is really important. All business people talk about it's really important to add value. It's probably the most important concept. Now, I like the definition if it's the difference between the selling price and the variable cost, and that gives you what we call a contribution. Or another definition is modifying the product. So for instance, if we can get a better, a more exclusive burger store going, we might well be able to charge £3 a burger. Now let's say we sell the same amount of burgers, our profits are going to shoot up. So in this case, if we sell £3 a burger, right, so this is now 3 quid. We now sell £1,500 worth of food in that day. That is our total revenue. Then from there we need to take off the 500 times the 1 quid, £500, take off the £200 of fixed costs, and therefore suddenly we've made £800 profit. So our profit has actually shot up in that instance. Okay, so that's how we can change, that's how we can create more profit for a business, how to increase profitability. Or we can also reduce our variable costs, so reduce the cost of the burgers, or we can decrease the fixed costs. All three of those things will then go and increase profits. But somehow we have to add value to a product, and then obviously we're going to make more money. Now, we also have a thing called gross profit margin and net profit margin. Now, if I go back to the original example, where I'm selling each burger at £2, so at the end of the day, I'm making £300 profit. Now, our gross profit now is just £1,000 minus the 500 quid. So my gross profit here is 500 quid. So it goes sales revenue minus the variable costs, and that bit there is equal to gross profit. Now, to get a gross profit margin, I do the gross profit, which is 500, divide that by the sales revenue, which is £1,000 times 100, and in this case, that is going to give me a gross profit margin of 50%. Now, my sales revenue margin is going to be £300 divided by £1,000, so do 300 divided by 1,000 times 100 over 1, and that is going to give me a net profit margin of also of 30%. Now, clearly, if I can increase my selling price, and I'm going to make much more on each burger, so my gross profit margin is going to go up. So this is a really important thing in business, because you want to be able to work out your gross margin. So in here, if I increase this to £1,500 again, so now my net profit is going to be 800 quid. So do 1,000 minus 500 quid. That's going to give me £1,000 profit. And then it's going to be 1,000 divided by 1,500. And that's going to give me a gross margin of 66.6%. Right, my net profit margin will then be 800 divided by 1,500 quid, which is, I haven't worked it out previously, which is certainly over 50%. So my net profit margin has also gone up because I've been able to raise the selling price to 3 quid. Now, that's a very quick lesson on profit, right, which is literally, and all kids should know this, is just total revenue minus your total costs, and that is equal to your profit. And as you'll find out in a later lesson, that will often come up on unit 3, but people forget how to do it because they've only done it on unit 1, so they forget how the process works. But that is always what profit is. And the total costs are made up of variable costs and the fixed costs. We can also work out 2 equations from here, which is the gross profit margin and the net profit margin. And these come out as percentages, and they will tell us something about the business. We've understood a little bit about how you can increase profitability. We can reduce variable costs, we can reduce fixed costs, we can raise the selling price, how we can add value, how we can modify the product, how we can create a difference between the selling price and the variable costs. So that will clearly increase profitability. And finally, we looked at variable costs and fixed costs. Now, all of these things must become intuitive as you go through the course. Okay, so this is lesson 1 over, and fundamentally I want you to know what profit is. Okay, this is an exam question that appeared about 3 or 4 years ago, and it's on Piers' t-shirts, and a lot of the paper was actually centered around the idea of profit and how much money you were making and working out profit. So the information that they gave you on the exam paper was that the selling price of these t-shirts was £9.20. The variable cost was £3.79, which is actually quite hard to work out because in one area it said £3.29 and then it added on an extra 50 pence later on within the passage, so it was actually £3.79. The fixed costs were £48,000. However, if you worked from home, then you wouldn't need to pay rent of £20,000, so therefore your fixed costs were then £28,000. Piers thought he'd sell 9,000 t-shirts, and if he stayed in business for 1 year, then his sales would increase by 30%. So when you read the passage, that's information that they gave you. Okay, so what do we do from then? And one of the questions was, can you please work out the profit? Well, the profit would just be simply 9,000 times £9.20, which is the selling price. That came to £82,800. Then we've got the variable costs. I put this in blue because obviously this is money going out of the business. So you then do 9,000 times £3.79, and that comes to 34,110. And then the fixed costs were £48,000. So you added the two together, which came to £82,110, and then you subtracted that from £82,800, and you come to a profit of £690. Great. That would have got you 3 marks. Okay, but the question then went on, and on the last question of the paper, they says, will peers make £15,000 in the next year? The key then was working out what is 30% of 9,000, and it's actually 2,700. And then you add that on to the 9,000 that they already had, so you got 11,700 times £9.20, and you went through the same calculation again. Obviously now the variable cost would also increase, and that'd be 11,700 plus times £3.79. You do the calculations again, and then you would come out with the profits of 15,297 quid. Now, once again, that would probably get you an extra 5 marks. So that's 8 marks on the papers so far. Another thing that you could have also utilised on the paper was, okay, so what happens if you can add value to the t-shirts and you can sell those t-shirts for £12 rather than £9.20? This was also another option that was given to you on the paper, where you could sell high quality t-shirts at a much higher price. Now, in this case, if you could achieve that, then your sales revenues was then 9,000 times 12, which is £108,000. The variable cost and the fixed cost would be exactly the same, and then you would get to 25,890. On top of that, you could also say, well, if you worked from home, if you did in fact work from home, then you could add an extra £20,000 onto that, because your fixed cost would fall to £48,000. Now, this is a really good example of how you could have scored almost up to 20 marks, which was 1/3 of the paper, by getting all of the numbers correct. And also if you understood the term adding value, because of course here you could have added value. We're talking about t-shirts. We've got to put into the context of the passage. So if you can personalize the t-shirts, have a really good brand image, create the right logo, then you can add value to those t-shirts, and hence you can charge them at a slightly higher price. So this is all about profit and manipulating a profit statement.